Hi everyone, welcome WIC channel. My name is Rifad. So this video is the fantastic series that I've been doing for at least now 3 months. Now it's the April three stocks to three kind of method to invest, because the third one is not necessarily a stock, but an interesting thing to consider to invest into. So I would say, kind of three stocks, but also maybe the third is not necessarily a stock, but interesting to look into, right? But so it's the series kind of go into kind of pick three stuff or three things I don't necessarily own or have or thinking about purchasing, but three stocks or stuff I'm interested in, and like it's good to know, and I kind of share with you guys the potential, or like what's my view of them and all this kind of stuff, for you guys to kind of open up your maybe your horizons and kind of be, oh yeah, maybe this is interesting stock to own, I would like to buy, so you kind of put that into your portfolio, right? And also to open a discussion, if we kind of have also your point of view about it, so it's not necessarily a thing that I vouch. I would say, hey, go ahead and buy it. Also, so this video also kind of goes over the overview. I kind of touch points on the financials, see how they're doing, the growth points, and how they've been doing the past years. So I'm gonna give you guys approximate idea of how the stocks are doing, kind of idea. So I don't necessarily vouch for you guys go and buy it. Always do your own research. So, but this is kind of to kind of tip your toes, to kind of maybe that intrigues your interest, we dive deep. So yeah, so let's get into it. So I'll go to the supercomputer and we'll start with the stocks. Let's go. Thank you very much for joining from the supercomputer. So as you guys can see, my first stock is not necessarily a stock, but completely a sector itself. It's an ETF. It's the BMO Equal Weight Banks ETF. So because it kind of covers the whole industry as banking. I feel the banking industry in Canada has been completely hammered lately, has been completely like hit hard and really dropped recently. So this kind of gives you a good coverage of the bank. If you're hesitating of kind of buying a single stock, which bank or which kind of want to put your money in, this kind of gives you a good good bet on the sector, because I'm kind of bullish on the whole sector itself, as you guys can see. So let's go into holdings. As you guys can see, it just pretty much holds the primary big banks in Canada. So it's kind of very good, right? So it kind of holds the big banks. So it kind of gives you a good kind of diversification in a way. So you don't have to pick one of its head, right? So, and like you can kind of go ahead and see the chart of the ETF. So year to date, it's been, I think it's up like 10%. That's what they said. If you can see here, from year to date, it's up 10%. So it's pretty good for an ETF that just can buy, and it's pretty good. So I find it's very interesting. So we can go here, and as you can see, the PE ratio just simply kind of give you an idea as per the sector itself in the value, right? So it's like 10. You're buying, the price to book is 1.5. So it's very interesting, because you can see is that you're just paying 1 times 5 the price of the stocks, and 1 times 5 the books of the whole sector they have. So this is within lines of the whole banking sector, because some banks trade at an evaluation of 8 PE, all this kind of stuff. So it's kind of within line of all the banking sector. So it's very good, but it's still relatively low compared to the whole TSX. So it's also good, and also they pay a good dividend. To hold them, they pay a 3.35%. So that's also to consider, right? And the expense ratio is not that bad. That's the fee they charge is 0.68. So it's relatively low compared to mutual fund and stuff like that. So it's relatively low. So this is kind of an ETF to consider, to kind of own if you guys want to own and stuff like that. So it's good to have and good to see, right? My next one, it's the fantastic Google. Let me pull that up here. Pull a stock here. 1 second. This here. So Google is my next one. Sorry for the delay. Sorry about that. So the Google here, so it's pretty much, I think, doesn't really, it kind of explains to itself. The PE ratio is relatively low. I mean, it's pretty high, but it's not that high compared to like itself, right? You can see the trailing forward PE is at 21, the trailing PE at 27. So it's high, yes, compared to the like S&P 500 and stuff like that, but it's kind of still low compared to the growth that it has in front of him, right? And you can see here the revenues. Like we can go a bit into the financials of the of Google. Like you see, just by 3 years, they kind of almost doubled their revenue, right, from like 74 billion to 136 billion. Like that's great, right? And their rate of increasing is pretty good, because year to year you can see they went from 110 billion to 136 billion year over year. That's another growth factor that they have running for them also. So we're not gonna hide it, right? They are a hefty growth. They are very quiet and they're planning, and that's one of the things I like about them. And also their balance sheet is another phenomenal. They are like $16 billion in cash. Their current assets is around 135 billion. They have barely any liabilities. That's like no debt, pretty much no debt. They have 34 billion dollars in current liabilities. But they have long-term debt that kind of falls in the long-term liability stuff. So they have around we'll say 4 billion in debt, which is not that bad, because anything happens, they still have cash to pay that off. But I know that Google has been in a lot of antitrust stuff like that going on, circulating. That's kind of taking a toll on the stock price. But in the long run, I think they can adjust those stuff, right? They can kind of wingle through those kind of problems that they're facing to kind of improve in the long run. So yeah, we can see here. So we can go one more time to kind of see the chart to kind of finish it off. The chart we can see. We just kind of go their 5-year chart. It's pretty extraordinary, right? You can have like back in like around 549 to 1000, almost 1200. And don't forget they had their split, right? They had a split also, kind of they did to reduce it. So that's also where that's to take in consideration. They did a split also. So this is a kind of good stock to have, and this is kind of a cool thing I had to kind of show you guys what they own, right? They own from Nest to like the popular people have the smart thermostat, to Android, which is one of the most popular operating systems on phones, to YouTube. Right now they're launching a Stadia, which is going to be a crazy potential for them to have like you can just select a game you want and just start playing. So you just pay them maybe a monthly fee, we'll say roughly around $10 a month, and you just choose a game you want to play and you start playing. So it could be, that's an interesting thing they have going for them on that factor, right? So yeah, this kind of gives you an idea as per the stock and where they're kind of going. So it's very I would say it's kind of going in a good way. They have a very good strong balance sheet, barely any debt. Their revenue has been increasing constantly per year over year. So it's really I would say in the long run Google is going to be there, right? Google, because of the ads and like they're very strong presence, and they're going to be here for a very long term. So you're just owning them and keeping them for a long run and adding shares as they drop would be a great thing to do, right? So yeah, so the third thing to invest, I will go ahead and do it in the whiteboard and not necessarily here. So let's go to the whiteboard and I'll present the third investment idea. Let's go. Thank you for joining the whiteboard. So the third stock, I would say the best thing to own is the famous good old cash. So that, my friend, is one of the things. The last thing I would say is cash. As for it's not really investment, I would say cash is the thing I would hold on for right now, because volatility is back, my friend, with like heft and heavy. They're back, and like you can see the markets have been going up and down. It's really become unpredictable with recent, like, the Fed's holding rates, the Fed like kind of seeing kind of not economical growth for a long in this short-term vicinity. That's causing the market to kind of be more in the conservative area, and the sell-off has begun. And so I would say kind of holding on to cash and finding a good entry point for some stocks, because some stocks could go into sales. So when you see the entry point, just kind of pimp in and go buy some stocks. So I would say the other thing is to hold into cash, hold your stocks and hold into cash and wait, wait for a good opportunity to invest. So in the same time, you can just accumulate money, accumulate wealth in the small side, accumulate, and when you find a good entry point, boom, you kind of pump in your money into a stock of your choosing, right? So yeah, this is my kind of final thing is cash. Cash is the king for now to kind of hold and to kind of buy some stocks, right? So yeah, those are the three things I would say to kind of look into to kind of my possibility invest, would say, for this watch list, we could say, for April. Like I said, it's three stocks. From, like, let me know, and if you want any Google, or like if you're thinking about buying Google, let me know, because I think it's kind of has a good projection coming in the future, and I think they're placing themselves very well for the future with a lot of platforms and the cloud business to they're now going to the gaming industry with YouTube kind of booming, and I think there could be a really, really interesting. I think the PE doesn't really reflect the growth possibilities that they have ahead, and so I think it could be an interesting stock with maybe 5 years from now. Could be very interesting where they could end up. So yeah, and finally is the banking industry in Canada. I think it's been hit hard. There's a lot of been short sellers and a lot of people kind of dragging down the industry with negativity, and also I think the negativity is kind of proven. Also, there's a lot of fact base of what they're saying, but still I think getting an entry point into a 10 PE, or like ETF that covers the whole banks could be a good hold. There's like those kind of clouds of negativity or stuff can happen. This is in the short term, but if you're investing in the long term, at the end it's just gonna pay off. So yeah, anyways, so yeah, this is about for this video. Drop a comment and let me know what you guys think. I would love to hear from you guys. And if you like this video, hit that thumbs up. That's all. That'd be great, because it takes a long way for this kind of boost the channel and this video for everything. So yeah, and yeah, and if I didn't say, also subscribe if you guys didn't subscribe. And also there's two links down below, one for my Twitter and one for the Facebook, if you guys are not following me there. So thank you very much for watching, and have a wonderful day.